3 of the last 4 times this happened, Bitcoin price exploded. Will history repeat itself? Hey guys, it's Keith Allen. Lots to talk about. The market is a little bit freaked out right now, right? Price is tanking, and the fear is palpable. And let me just say, before you push a button, you want to listen to this analysis. You want to watch closely because I'm going to show you some things that you might not be expecting. Things are not always as they seem. Right now, they seem pretty bad. There's no disputing that. Oh, look, I just had an order filled. Okay, then. So let's talk about it. What's happening right now, right? Market fear is high. Sentiment is reaching new lows. That downward momentum has pulled Bitcoin into a death cross. The 21-day moving average has crossed below the 200-day moving average, and that's kind of a scary thing, right? So what does this mean, and what has it meant historically? And I'm going to say that, as scary as this may seem, there's a lot of reasons to resist the urge to panic sell right now. Certainly, if you don't fully understand the dynamic forces at work here, you really, really want to pay attention to this. I'm going to show you how this move has played out historically, and we could go from there, right? We're not going to make assumptions. We're going to look at the charts and let the data do the talking for us. As per usual, do me a favor if you haven't done so yet, smash some buttons, help me grow this channel. I do this for you every week, and all I ask for in return is that you help me grow the channel by engaging with me. Hit the like, hit the share, bring in some of your friends or fellow community members, and most importantly, make sure you hit that subscribe button so you don't miss any of my future streams and all that we have to offer here. Hey, Bryce, good to see you again. Let's see what we can climb into here. I want to start here on I guess we'll start on the Bitcoin chart and show this nasty death cross and what's happening at the moment as price now. Wow. I mean, I'm not going to lie. It ain't pretty. I mean, there's no getting around it, right? It's not a pretty scenario, but it is times like these that the opportunities present themselves. So you've heard the old adage, be greedy when people are fearful and be fearful when people are greedy. Well, right now, people are fearful. I'm not saying that right now is the time to buy, although I did just get an order filled. But not a Bitcoin order, by the way. It was an ETH order. And I'm going to show you why I had something at that level. And I'll show you where I'm looking to see ETH bottom out here. I mean, Bitcoin bottom out here as we now head towards the 100K mark here on the chart. You can see this death cross here happening. So let's look at a few things here. I had posted this chart earlier in our Telegram community, and if you haven't joined the Material Indicators Telegram community, I really invite you to do so. By the way, for anybody new, my name is Keith Allen. I'm a work-from-home dad. I'm a full-time trader. I'm co-founder of Material Indicators, and we have a fantastic free Telegram community, and we're talking trading all day long. This is not your typical trading community. There's no moon boys, there's no shilling, there's no BS. It is just straight up crypto trading talk 24/7. So hope you'll join us. Links to that are in the description of the video here and also at the top of the Material Indicators homepage. Also on the Material Indicators X channel at mi_algos and on the YouTube channel as well. So this chart I shared earlier today, and it shows an interesting dynamic. Oh my gosh, a lot has changed since I posted it first thing earlier this morning. And one is this big spike in stablecoin dominance, which is this is a macro risk off indicator right here. This is where we get into the scenario of a low tide lowers all boats. You've heard me talk about a high tide raises all boats. This is low tide lowers all boats. At the time, when I posted earlier today, we actually had ETH dominance finding support here at this trend line. And now it has lost that support, and now stablecoin dominance, which was down here, has now broken resistance. So this is definitely a risk-off scenario. And as you can see, Bitcoin dominance still remains above 60%. So marinate on that for a second. Where does that what's that tell you about just the dynamics of the crypto market in general? I'll tell you what it tells me. It tells me that Bitcoin is king. That's not news, by the way. It tells me that your basket of alts are headed for the dump, and ETH is struggling right now, despite all the positive news that's been out on ETH. It's struggling a bit too. Which again, Bitcoin is king, plain and simple. Now, do I think that this is going to be an always and forever thing? That there's no recovery in sight? No, I do not think that, and that's why I just purchased. So let's look at this in terms of charts, and let's look at this actually before it gets away from us. Let's look at support and the order flow dynamics here in fire charts. You can see we do have about 37 million in bid support here at 100K. But you can see the sell pressure is on here. Yeah, there's somebody up here T-whopping, and I would be hard pressed to think this is actually retail buying. I think that this is probably an institutional entity with a T-whop bot at work here. Let's take it down to the daily time frame and see if we can get a little bit more granularity here, and see that we now have a bid ladder extending down here. Well, it goes all the way down to the 85 level, but I don't think we're headed there, to be honest with you. Our concentration of support here at now there's 39 million here. So this is getting fortified here at 100K a bit, by the way. 100K is really, in my opinion, a little bit more psychological than technical, and I'm going to tell you why. Obviously, the round numbers always have some, resonate with the market and the algos, but let me switch on our timescape levels indicator and show you what I'm looking at here. So we have a situation where we have now our yearly open coming into focus here. Here's the yearly open down at 93.3K. And here's the first weekly open of the year at 98.3K. And here's why I like these two levels, not just because they are important timescape levels as the yearly open, but also because of the double bottom scenario potential here. Okay, so let's focus here on this 98.4K level. As you can see, this was the first weekly open, just like I had previously mentioned. First weekly open of the year. Now, why do these matter? Well, these timescape levels matter. They simply do. It's hard to explain why they matter, but if you look through history, you can see again and again where they have held as support or resistance, and that plays out with pretty good regularity here. But in terms of this, the dynamic relationship with this particular death cross between the green 21 and the purple 200-day moving averages, let's look at the last several times this particular dynamic has developed. Back in March of 2025, we saw this happen, and it took us into a double bottom. And where was that double bottom? That was at 70, almost 75K. And that is the last, that's really our hard macro support here on this run since March, April. And that was really triggered by, we found that bottom with that first tariff announcement in April of 2025. So we did find a bottom off of this, right? This led us to the promised land, which is why I say today may not be the buy opportunity, but it might not be too far away. If we go back to August of 2024, similar set of circumstances where we were actually in a bear market off of the prior market. No. Excuse me. I'm getting ahead of myself. We were not in a bear market. I'm thinking back to the the teens in 2021. Back in March 2024, right? We had topped out here around 74K, which is, again, has some confluence with that double bottom that I was talking about. But we found another double bottom here off of this. So 2 for 2, double bottoms to huge explosive moves to the upside. All right. And where was this one? This one was at 54K. Let's back it up a little bit more. This was August of 2023. And this was actually the beginning, right? This also took us to a double bottom scenario. You might even argue triple bottom. This took us to a double bottom scenario. And that was, in hindsight, really the beginning of this bull market. At least the confirmed beginning when we uncrossed here. So what you're looking for now, if you're trying to get that beautiful entry, you're looking for those double bottom bounce areas or those key support level areas, which again, the way I view it, come in at this, at these timescape levels. And I think that would be potentially either here at 98 and change, or this would be my, this is going to be my line in the sand. I think at this point, 93.3 is the yearly open. As long as we stay above this, in my opinion, there's a chance of recovery. So I want to take it back further, right? So there is an instance where this did signal a bear market, and that the beginning of a bear, or the confirmation of the bear, right? And that was the all-time high back in 2021, where price topped out at 69K. We saw a rapid decline from that all-time high, right? A rapid decline from that all-time high. And that took us into this death cross, and the rest was history. That really was the end. But if we go to one event prior to that, we also had, again, another death cross that led us to a double bottom. And that was not the end. This was, some would argue, there are some technicians who would say, hey, this was really the top of that market, and then this was manipulated. But let's face it, the manipulation game hasn't ended. And there's a good chance that we could see a similar scenario where we get another leg up out of this. So why the decline now? Why the rapid decline now? And I'm not even going to look at the. I'll be honest with you. I haven't even looked at the news relative to the government shutdown and Trump and blah 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 noise. But I did tell you guys over a month ago that if this government shutdown extended more than a few weeks, it might get nasty. That was number one. Number two, there is uncertainty on the whole tariff war and the failure to sign a deal with China, despite all of the rhetoric about the meeting being a 12 out of 10 and whatever bullshit that means. So those are not even on my radar right now. What's on my radar is the fact that if you are a 4-year cycle evangelist that's counting the calendar days, we're coming right into we've arrived at that zone where the 4-year cycle, many have called this to be the end of the 4-year cycle, and it very well may develop that way. However, there's a lot of positive fundamentals, and I know that fundamentals haven't really mattered as long, well, they haven't mattered as long as they should have, or perhaps even as much as they should have, in my opinion. But I do think with the broader institutional adoption and the sovereign adoption, that the fundamentals do matter. So there's that. Let's see. Oh, hey, thanks, Jason. I appreciate it. He says 92 to 94K is where he's looking, and that gets us right in the middle of the yearly open range. and thinking that 98 to 100 doesn't hold. And you might be right. I guess we're gonna find out about that soon enough, Jason. But I do appreciate the insight. Um, so there's that, right? Just purely on the 4-year cycle. If you're counting the calendar days, it's time, and so that is influencing sentiment and probably some algos that are programmed to that. Meanwhile, there's some other things that are worth looking at, and one is, let's zoom out to the weekly time frame, and I want you to notice something here. Look at all of the previous touches to the 50-day moving average, and the 50-week moving average. That's the red line here. And yes, we've overshot it for the moment, but I want to caution you not to react too quickly to these things, because on a weekly time frame, this really hasn't played out until the weekly close. Now, you could argue, well, hell, if I wait for the weekly close, I could get drained. Your risk management principles should not have changed, right? Your risk management should be in place, and if you had a stop loss somewhere along the way, then you should respect that, right? I would not be changing your rules because of the emotional behavior that you're feeling right now. If you have rules, stick to them. If you don't have rules, make some before you make another trade. But look at this. Touch to the 50 and an overshoot to the 50-week moving average. Same here. Boom, great support. Down here, boom, great support. So that's a level that has served us well here this year. And I want to show you something else. I'm not a guy who really likes to move my lines around and change my geometry on my chart. This trend line here I drew after things really, the trend really started to take shape. This was, there was Trump pump involved, et cetera, et cetera. But if we go and look at my historical stuff here, here is, that's not the one. Where is my other? I've got another macro. Here you go. Macro support trend. Is that there it is. So that is still in play. And this goes all the way back to where we bottomed out on the FTX crash, which incidentally is where I started building my position. If I had only held more. But I do have a tiny bit of Bitcoin from down in this range. And I have built my position literally on these support levels, right? And on these consolidations and on these bounces. So what I'm looking for here, we could conceivably look at this trend line that I just put back in play. Look where it has confluence perfectly with the yearly open. So I like this 98.3 or 4 level, somewhere in this range, right? I like this 98 and change level because of the potential for a double bottom bounce here, and the fact that it's a good timescape, and it would keep us out of a lower low scenario on that time frame. And if that doesn't hold, it would be down to the trend line. We have some confluence here with the yearly open and the trend line. This makes this a very strong support level as well. And obviously, there are some support tests in this range that make this a strong level as well. So this is where I'm looking. Now, in terms of ETH, and I'll be honest with you, I haven't even looked at an ETH chart today, but I did just get filled. I told you that at the top of this stream. I got filled right here on the 200-day moving average. And I like this for a lot of reasons. I like it because it has confluence with our yearly. Look at this. Here's those yearly timescape levels. Let me see if I can zoom into this a little bit for us. Okay. Hard to see with the purple moving average here with the overlay of the volume. I can maybe take that out. Okay. So here it is. So yeah, I just got filled there because I feel strongly about the ETH narrative. I didn't feel this way for a long time. I haven't felt this way most of my trading life. I haven't felt this way since 2017. But Something Tom Lee has put in play has resonated with me. I'm not into ETH at this stage simply because there are treasury companies. I'm into it because of what is fundamentally being built around ETH, and that is this next generation financial system. That brings me to another thing that I have talked about at length in the past several months, at least since we started talking about the Genius Bill and the Clarity Act, et cetera, et cetera. I had said at that time that, and you could go back and listen to any of those streams. They're all here on X and on YouTube. But when we were talking about that, so here's the deal, right? Banks are coming into crypto, right? For a long time, they were anti-crypto. You couldn't on board with a lot of U.S. banks. You couldn't use a lot of U.S. banks to buy crypto. People like Jamie Dimon at J.P. Morgan were bad-mouthing crypto every chance that they could, and now guess what? They're offering it. They're allowing or going to allow their customers to collateralize their Bitcoin holdings into loans and mortgages. So the tide has turned on TradFi and on legacy finance, more specifically, that they're coming on board now. That ship is not a nimble one. It does not move quickly, but they are preparing and they are coming on board, and they're going to come in waves. And do you think that they want to start offering crypto to their customers when it is at an all-time high? Or do you think that they would much rather have some upside potential so they can attract in more customers and into this side of their developing business? So I have always felt that when we saw these larger financial institutions coming on board with crypto, and I'm not talking about the BlackRocks and the Fidelities that have already been in the game with their ETFs. I'm talking about the JP Morgans and the Bank of Americas and the Wells Fargos, et cetera, et cetera. I'm talking about legacy banks and financial institutions who are now looking for opportunities to get more involved in crypto and utilize it in their financial system, not just as an investment product, but also for transferring funds. And that aspect goes into ETH much more so than Bitcoin. But I think, I need to do some research to find out exactly when and at what pace they're onboarding, and a little bit more on how they're going to be using it. But it's clear that at least at the early stage that they're going to be building on ETH. Even if they're building their own proprietary blockchains, they may initially be modeling off of ETH, and then, hey, maybe they even build off of ETH. Who knows? So we're going to do. Somebody's actually asked me to do a live stream on that, so I'm going to do some more research on that so that I can speak to it much more from a much more educated perspective. Let's see. Jason has more to share. For me, it's realizing that ETF FOMO buyers take a loss at 92.5 to 93. And plus this walk down at 101. Yeah, I don't think that that 101 is where it stops. I'd be surprised. And let me just look at something here. The bull case for this 50-week moving average is obviously getting threatened right now. In my opinion, this 98.3 is so close that it would take very little to just wick down to it. And let's look and see if anything is changing here in terms of order flow, right? Are we going to see any of these blocks move? Are we going to see potentially even a rug pull? Okay, look at this now. We have 102 has been penetrated, and now it looks like a little bit of bid liquidity coming in on top of it, try and push it down to 100. 100 is fortifying It now has 31 million on the daily time frame. A little bit different binning here on the weekly. I think we were up a little bit higher. Yeah, 40 million. And that's just based on how this is binned here in these different time frames. So you see a nice bid ladder here ready to absorb. That's institutional money wanting to buy in at these levels. Okay. But as you can see here, they are not buying yet. There's been a little bit of buying here on the mega whale side, but not a lot. I'm watching to see when it happens down here, and we could be getting like this could be a little bit of smoke and mirrors right here of what's happening with this orange order class. It's the smallest order class, but a lot of times we'll see incremental buying or selling from this order class. Kind of a divergence from the rest of the order classes. And that's often a institutional player using smaller orders to just, in this case, accumulate a little bit. All right. So nominal buying here at the bottom, negligent almost, unless this develops into more. So watching this, and again, I think we're close enough. Going to be, I think 100 is inevitable, at least testing it. Going to be interesting to see if it holds here, if we see more bid liquidity come into play here to fortify this level and build strength and support, or if it gets eaten, or if potentially we see a rug pull. Also something we can't rule out. So I like this range. I like this range. I like this 98 better than the 93 level because there's very little bid support above 90. So 95 and higher seems better to me than 90 to 95. So that's why I'm looking in this 98K range. A little bit different perspective than Jason, but that's okay. Different perspectives are all good here, and that's what makes this market good. And quite frankly, it makes us think about our own analysis. So I appreciate different views. Hope you do too. Let's see. Think we see sub 3K ETH for what it's worth. Love the timescapes idea. Definitely supported by historical. Yeah. This timescapes deal is our newest indicator. And quite frankly, I scratched my head for a little while. I was like, why does this work? And then I just, kept playing with it and kept playing with it. And then ultimately started trading with it. And it's been really, really consistent. It saved me. It has saved me. It's saved me more from a risk management perspective, probably, than it's made me on trades that I've taken. Just because I've avoided taking some trades that I would have probably taken otherwise. Hey, Susie, good to see you. Good to have you back. You've changed your name. You're in the flow state. Okay, good. Glad to have you. Appreciate you being here. So that's in a nutshell what I'm looking at. Let's look at ETH real quick. At the moment, I'm getting this bounce, and it's something I'm going to watch to see if we see some recovery here. Now, in terms of what I'm expecting here for the rest of the year, I'll be honest with you. Even if we recover out of this today, I'm not so sure that we get a new all-time high out of anything before the end of the year. And one of the reasons for that is, well, let's start with Bitcoin. One of the reasons for that is trend precognition has already given us the warning, not just on the monthly, right? On the quarterly, right? On the 3-month time frame. Now, in all fairness, this signal is one that I thought would have invalidated because of the fact that we did actually squeak out a new all-time high. But the signal held, and the signal held because the algo sees more downward momentum, and this signal actually got stronger. 62% probability that we're not going to see another all-time high here before the end of the year. Yes, it can be invalidated. The signal um, does not print until the candle close. So it's a tentative signal, but it's a very, very strong one at this stage. So this is why I don't expect a new all-time high this year before the end of the year. That said, this did get us a new all-time high, but it also got us the biggest liquidation in crypto history. And we may be looking at the second biggest developing right now before our eyes. Let's see what we get on ETH in that same time frame, right? So the monthly telling us already we're not likely to revisit the highs this month, and on the quarterly does not give us the same doom and gloom outlook. So we could see a recovery out of ETH later in the year, potentially. And we're kind of flat here on the A1 algo. This is just chopping at this point. So this is indecisive. That's going to be interesting to see how that changes. Obviously, on this month, we're seeing back to confluent signals here between both the A2 plus algo and the A1 algo, both of them pointing to downward momentum, which means not likely that we're going to go higher. This signal is only a 38% probability versus the 62 I just showed you on that quarterly. So I do like that we have this support here around these timescape levels on ETH, and this could be very, very telling. Also, the fact that we have confluence not just with the timescapes, but also the 200 moving average and the 0.618 fib. There's a lot of strength at this level right here, in my opinion, for ETH, and I'm optimistic that I'm going to get a recovery from here to build my ETH position. So there's that. Anything else you guys want me to pop into while you got me? I'm going to have to break here. I got a conference call coming up in a few minutes I got to prepare for, but I hope this has given you some stuff to think about before you move into panic mode. Let's see, Litecoin. We talked about this one the other day, and look, it's coming. I said I expected it to go to the trend line here, and that's what I'm eyeing up. It is right now. Just lost the 0.382 fib. I mean, after a 61.5% flush, how much lower can it go? Is it really going to go all the way down? Again, I'd be surprised. I'm looking for this trend line here around 82 for Litecoin. And with that, guys, I'm going to go ahead and wrap it up. Susie, keep on flowing with life. Hope you hedged or got out of that what was it, that cast trade we were talking about earlier a month or so ago. I'm guessing it's probably not doing very well for you right now, but hey, this could be the move that leads to the bottoms. So keep that in mind. We talked about what we need to watch in terms of whether this has the chance to develop into the next leg up or full bear market. Here's my line in the sand. It is the yearly open, which has confluence with the macro trend line from back in, all the way down to the FTX crash, where this major move really started from. So keep that in mind. If you want more insights, you want to engage more, you can catch me on X every day, and of course in our Telegram community. Links to it are in the description here and in the profile of the Material Indicators X page, and on the website and YouTube channel as well. No, I'm holding conviction. You go, girl. Good luck with that. All right. I don't want to see anybody get wrecked. Not on my watch. All right. Hope that helps you out, and hope this helps you trade smarter. Thanks a lot, guys. Appreciate the follow and the ongoing support.